looking at the Japanese markets in terms of what we saw from BOJ this week, inflation still at a 40-year high. How to make sense of all of this?
Well, good morning. It's wonderful to be here in person. It's been an eventful week in Japan, but really from our standpoint, not much has changed. We remain very excited about the Japanese market. I think what we have gotten this week is a tacit acknowledgement from the BOJ that Japan's dalliance with deflation is done, that in light of the data, in light of the earnings growth and the wage growth and the higher prices of energy, the policy that they had was not the right one. So we haven't normalized policy yet, but we're moving in the right direction.
And so, I mean, in terms of a timeline or indication for what the BOJ's next move could be, do you have any idea of what it could be?
I don't think so. We don't know what it could be. We didn't know that this announcement would come in December. We had on our list of surprises for 2023 that this could happen. Now, timing we don't know. I think what we will see more of the same. I think before we change the BOJ governor, it's important for consistency and for messaging for this to happen sooner rather than later. But I think it's a step in the right direction, and it's what's necessary.
But at M&G Investments, how are you thinking about what this means for liquidity, cheap liquidity, come 2023 at the start of the year? Because right now people are on a break, right? Volumes are thin. But when you come back and you realize the Bank of Japan, the cost of capital is going to go up there in expectation, does that put pressure?
It might. What we saw earlier in the week was more of a reaction and in a more liquid environment, more volatile environment than I had expected. Actually, with the banks and with the exporters lifting offers on the former, hitting bids on the latter. And I think the liquidity has come back, given the magnitude of the change. Now, for us, at the margin, we changed our portfolio a little bit in anticipation of this, thinking that maybe something would happen in the first half of next year. So increasing exposure to banks, decreasing some exposure to exporters. But that actually had started after the most recent earnings releases, when we saw the magnitude of the FX benefit for a lot of these companies, and just thinking that this is not sustainable.
It's not sustainable.
Right. I mean, how have you tweaked things and moved things around, adjusting in terms of that portfolio? I mean, you say you like the banks. Do you have any interesting names and other sectors that you like as well?
Well, in the banks, the mega banks, some insurance names as well. A couple of weeks ago, I think this...
Here in Asia?
In Japan. I'm starting in Japan.
Okay.
Staying in Japan for now.
Yeah.
And this week has been a test of our conviction, because I was on a couple of weeks ago talking about small caps in Japan. And given less liquid, cash flows are further out, the rise in the price of money has tested or put downward pressure on a lot of those prices, but we remain very long-term shareholders. The corporate transformation is underway. It's real. The earnings growth is real at the bottom-up level and at the top-down GDP level. We think real GDP growth will be seen in Japan next year, and we can't say that about most countries.